Good afternoon. Time to check in on those markets. And as we usually do, we start things off on the Asian side, seeing a mixed performance there, and especially when we look at how the Hong Kong markets traded, closing down lower by 0.3%. What we also saw was the Chinese tech firms slipping a little bit, and that's because investors are paying a close attention to the European government stance when it comes to the regulatory side of things. The other talking point was the Reserve Bank of Australia. They announcing an outsized interest rate hike decision, the highest in 22 years, and investors quite concerned that perhaps this is an indication of global caution coming in ahead of the ECB tomorrow and the Fed next week. Nonetheless, we are seeing European markets at this particular point pulling back as inflation concerns do continue to grip the markets. We do have those inflation figures coming out of the US on Friday, so that will give us an indication as to whether inflation in the US has peaked. Nonetheless, you heard us report that our Q1 GDP figures coming in at 1.9%, indicating that the economy in the first 3 months of the year expanded by 1.9%. And we did notice that a little bit earlier, just ahead of those figures coming out, the rand did pull back a little bit, currently at 15.37. But to talk to us about the latest in the markets, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. So we have the the interest rate announcement coming out of Australia blindsiding the markets, and when you look at that performance in terms of the Asian side of things, Europe pulling back, those inflation concerns coming to the forefront. How is our local markets, and I suppose even our currency at this point, given those Q1 GDP numbers, faring?
All right, so generally the market's looking a bit weak today. I think we're very much down in line with Europe, which is also not a happy picture. So yeah, I mean, we're basically tracking the rest of the globe at this stage. I'd say our currency looking fairly stable under the circumstances. Obviously, I think there should be some concern from the markets in relation to the current issues surrounding the presidency. I guess I'm quite pleased to see the rand looking relatively stable, suggesting that major players think that may ultimately be a storm in a teacup. I certainly hope so.
As I mentioned in my intro, we've got those US CPI figures coming out on Friday. What is the market expecting? And I suppose, depending on what the market is expecting, what does that mean for the pace of hikes for the Fed?
Okay, so the projections that I've seen look for a 7% annualized, which is, and I have to say it's a very, very important bit of CPI data, this, because what we're looking to see here is the question of, will the March and April data points of basically 8.5% annualized prove to be the high watermark? Well, obviously, we certainly hope so. I think it is important to bear in mind, looking at inflation from geographies to geography, is that the makeup from those inflation numbers does actually vary quite widely. So, for example, when we look at Europe inflation, there's lots and lots of energy in their inflation numbers, and not so much in the US. It's very important when looking at inflation data noise that one's very wary of how each country's inflation basket is actually made up.
The other news that caught my attention was Elon Musk threatening to walk away from that $43 billion takeover of Twitter. And I mean, a month ago, this was the biggest talking point on various social platforms. Are you finding yourself wondering whether this deal will actually happen?
Well, it may or may not. I think at this stage, what we've seen is obviously a market that has come down. I mean, tech has been coming down quite some time. Certainly when he got in, I mean, Musk waived his rights to have a look at deeper financials. So perhaps here finding a new sticking point. But the core issue up for discussion is the number of fake or so-called bot accounts. Twitter says they're probably around 5%. Musk says they're possibly at 20%. But I think the key point is that having put a price down, it's quite hard to get it pushed lower in negotiations. So this may very well just be a negotiating tactic. I mean, each has a $1 billion break fee now put down on the table. So they're kind of locked into to getting some kind of resolution, because that break is pretty expensive. But after all, the price reflects an enterprise value of $200 per daily active user. So that's quite a price. You obviously want to make sure that you're getting yourself a real live human user.
So yesterday we had Gary Boyson as our market analyst, and we were talking about some of the comments coming out of Elon Musk and the likes of Jamie Dimon. Elon Musk saying that he's very concerned about where the economy, having a super bad feeling, and Jamie Dimon saying that brace yourself for an economic hurricane. To what extent do comments like that coming out of the CEOs concern you about the second half of the year, whether it's local or global?
Look, I think those sort of comments generally may reflect particular positions. I mean, after all, as a bank executive, I mean, Jamie Dimon has to make sure that he has effectively conditioned staff to behave in a prudent fashion. And after all, there's lots and lots of ways in which things in the current rate hiking cycle can go wrong. That said, I mean, any business executive who now at this point in the cycle said, well, everything will go better, would really be taking on an incredible amount of credibility risk, whereas there's almost no credibility risk in saying, well, gosh, things look serious. So I think they have to be viewed with a little bit of caution. I mean, the markets are continually trying to price in what's going on. And I mean, look, there are certainly things to be concerned about. I mean, central banks are dealing with an inflationary environment that they haven't had experience of in a number of years, and that is supply side problems, logistics problems, commodities. As an inflationary driver, and of course coming down from the whole incredible money printing exercise that occurred at the same time as COVID. So yes, there are unique issues here to be dealt with. Is it an all fall down? Not so sure about that. Doesn't have to be, but there is certainly policy error could make things a lot worse.
Warwick, unfortunately, we have run out of time. Thank you so much for joining us. And of course, that is Warwick Lucas from Galileo Securities. We will be keeping you updated as the market news unfolds. And of course, unpacking some of our local company earnings that will be coming out on Friday. We're going to take a quick break. And when we come back, we'll have